Welcome ladies and gentlemen to this video. In this video, we will analyze the Fiverr stock from various perspectives to gauge its feasibility as a long-term investment. Fiverr is one of the stocks which billionaire money managers have been buying hand over fist. Just in case if you don't know, Fiverr is an online services marketplace and it trades under the ticker symbol FVRR. Over the trailing half year, shares of the company have plummeted over 60%. But now the things seem to take a U-turn and the market sentiment is becoming positive. Over the past 7 days, the number of articles that are bearish are non-existent and the number of bullish articles is over 100% as compared to the sector average of 64%. So Fiverr has been in the same boat as other tech stocks and its price took a nosedive just like many other tech stocks with great potential and solid business models. Despite the price decline, savvy investors, hedge fund managers and institutions are accumulating. BlackRock's Larry Fink, Renaissance Technologies' Jim Simmons, John Overdeck and David Siegel's Two Sigma Investments gobbled up almost 525,000 shares, over 303,000 shares and just shy of 268,000 shares respectively in the fourth quarter. And this accumulation started at its peak price in January 2021 and since then the stock price has plummeted almost 5 times. But the hedge funds kept on accumulating during this whole time. This means that the hedge funds trust the business model, management and strong fundamentals of the Fiverr platform. This love for Fiverr among billionaire investors and hedge fund managers seems like a reflection of changing economy and shift towards the gig economy. Also, with the traditional workplace disrupted during the pandemic, freelancers have discovered that they can contribute their innovation and services to society from anywhere in the world, which is the main essence of gig economy. That is where the platform like Fiverr and Upwork make a difference and get the network effect by allowing freelancers to sell their services. Fiverr's role in gig economy. What makes Fiverr so intriguing is its sales approach and the sheer amount of service revenue it generates as a result. Instead of simply allowing freelancers to price their services hourly, it allows freelancers to price their services as a package. This creates far more price transparency for businesses looking to purchase the services of freelancers on the platform. And it is not surprising to see that the spend per buyer continues to climb. It has hiked from $205 in Q4 of 2020 to $242 in Q4 of 2021. It is worth noting that the company's take rate is really impressive. This is what take rate means. What it gets to keep for facilitating freelancer buyer arrangements via its marketplace. Fiverr's end results pointed to take rate of 29.2% in the fourth quarter, which was more than double the 14% take rate of rival Upwork in the same quarter. What is more, Fiverr's take rate has been expanding throughout 2021 while Upwork's was consistently flat or else it fell. Fiverr's fourth quarter results and organic growth. Many stocks that support a socially distanced lifestyle soared at the beginning of the pandemic and are now being reset for regular living. While for some companies this is justified since they may have grown too fast, but for some companies it is not. These are the companies that are still posting high growth and have the potential for much more. Investors are still figuring out the right way to value these high growth companies that are posting decelerating growth. Many tech stocks have lost much of their value due to the overall negative sentiment around the tech stocks since the beginning of 2022, but now they are looking like real bargains. Fiverr stock is one such stock that ballooned 730% in 2020 and it could not sustain that level of upward momentum in 2021 and dropped around 40% of its value. It is now down another 38% in 2022. This has been pretty crushing for many Fiverr shareholders, but it creates opportunity for new investors. Fiverr released fourth quarter earnings last week that demonstrated continued momentum even though it is slowing down. Again, that is not surprising as the biggest shift may have already occurred when people left offices and began to work from home. The word decentralization is popping up in many contexts and it manifests itself in this conversation as well. Offices and workplaces are becoming decentralized and more people are working from home even as offices are reopening. Fiverr is well positioned to benefit from this trend and perhaps uniquely so due to its focus on enterprise accounts. CEO Misha Kaufman pointed out in the earnings call that not only are people leaving their jobs to freelance or start their own businesses, but large companies are having trouble retaining full-time employees and are relying more on decentralized and freelance workforce. These trends contribute to Fiverr's success from two opposing sides. In the fourth quarter, growth highly accelerated with sales increasing 43% year over year versus 42% in the third quarter, beating internal guidance. Active buyers increased 23% year over year to 4.2 million and and spending per buyer increased 18%. The take rate, that is the fee Fiverr takes from projects, reached an industry-leading 29%, and that is a phenomenal performance. However, its net loss more than doubled year over year to 19.5 million. The company also reported adjusted net income, which includes share-based compensation, amortization, and depreciation, which it considers an effective measure of its underlying business. Adjusted net income increased year over year from 4.8 million to 9.2 million. Management is forecasting around 25% to 27% year over year revenue growth for both the 2022 first quarter and full year. At the current price, shares trade for about 10 times sales, which is still expensive but reasonable if you believe in the growth story of Fiverr. And now, an excellent opportunity and key stats. Number 1, the growth of freelance platforms. A report by Orbis Research estimates that freelance platforms across the world will grow at a compound annual growth rate of 15.3% from 2021 to 2026. Fiverr is one of the main companies that will capture this growth, as it has already shown its success. As I mentioned, Fiverr's buyers popped over the past year from 3.4 million to 4.2 million, representing growth of almost 24%. This shows that the demand is increasing even as the world is emerging from pandemic lockdowns. Number 2, outperformer in its industry. With a growing user base that keeps coming back, combined with acceleration in the high spending customer segment, could result in continued success. The company does face competition from other platforms like Upwork, but the fact is that Fiverr's platform is gaining steam much faster than Upwork. Since 2019, Fiverr's revenue has grown almost 300% compared to Upwork's revenue growth of just 108%. Upwork's revenue base is larger than Fiverr's, making it more difficult to grow revenue at such rapid rates. But Upwork's client base is just 771,000 compared to Fiverr's 4.2 million. And Fiverr is growing this base at a slightly higher rate, 23% year over year compared to 21% for Upwork in the fourth quarter of 2021. Number 3, lower share price. With Fiverr shares sinking and revenue expanding, the company's valuation has gotten into value territory. Shares trade at less than 9 times sales, close to Upwork's valuation of 6 times sales, despite the fact that Fiverr's growth is much faster. This value proposition, along with the company's expanding leadership, presents itself as a good opportunity to buy the Fiverr stocks as a long-term value investment. Therefore, I believe that Fiverr is an entrenched company with solid fundamentals and growth prospects. Please do your own research to gauge if it is the right fit for your investing goals. Let me know in the comments below, what do you think about the Fiverr stock? Do you think that it is a good long-term investment? If you found this video useful, please don't forget to smash the like button for the YouTube algorithm and consider subscribing. That would mean world to me. Thank you so much for watching. I really appreciate it. You all are awesome, and I will see you guys in the next video.